You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means yes, we are back live here on the old network. Live right to your hearts here for our kickoff show, which is, of course, the Option Block. Did you miss us? We were gone for a little bit of a hiatus. You know, I do like the Thanksgiving holiday. It's one of the few times of the year where I could take a few days off, and it's not the end of the world. We don't really miss out on a ton on the markets. A lot of our folks are traveling, so it's a good time for everyone to kind of take a break, reset, recalibrate out there. So I'm back, listeners. I'm rested. I'm refreshed. I'm full of turkey and all the trimmings. Hope you and your family had a great Thanksgiving. If you're here in the U.S., you're one of our many international listeners. Hope you just had a great week, a nice, relaxing week. You got to refresh, maybe see some friends or family, and just to recalibrate away from your screens. But now we are back. For all of you newcomers out there, my name, of course, Mark Longo from theoptionsinsider.com. Welcome you to our first show of many here on the network this week, known around the globe as the Option Block. Of course, you guys can get it live if you want to go over to theoptionsinsider.com/pro. That will also get you access, of course, to a bunch of extra stuff, including 2 extra shows, great pro Q&As, the Flow Master coming on in to answer all of your options flow and all sorts of deep into the world of options questions you folks always have whenever the Flow Master joins us, Mr. Henry Schwartz, as well as, of course, Options Oddities coming up again later this week. It's coming up, listeners. Seems like we just gave away the freaking October crate. Now we're coming up on the November trading crate, so we know a lot of you joined up here over the past week. You are all automatically entered to win if you haven't done so yet over there, theoptionsinsider.com/pro. We know times are tough. A lot of you out there scraping your pennies together, so for all of you out there, we even threw together a little Black Friday, Cyber Monday deal for you out there. So theoptionsinsider.com/pro is the place to go to get that deal right now. If you want the coupon codes and all that fun, just check us out, I should say, over there on the Twitter. It's all there, the promo codes to get your discount. But the clock is ticking. Head on over there to join us. And, you know, it's our first show of the week. We've been off for a while, listeners, so we thought we'd come back in grand style. And I was looking at the numbers before the show. It does seem like Uncle Mike has pulled into a small lead, a 1-point lead right now in our battle for the epic, vintage, but new, redone, remastered Sergeant Slaughter figure that everyone is battling for in the G.I. Joe style, of course. I do believe mine might have actually come, so I think we shall see. I'm not sure if this one has arrived yet, but we shall see. So I thought we'll turn it up to 11 for the remainder of the year here, make things fun, because we've already guessed a legion of 80s wrestlers, probably all the major ones, and done so again. So how can we add a new wrinkle to this last part, the last month here of this epic contest? I thought, what better way than to guess not just one 80s wrestler, but we're going to guess 3, listeners. Yes, I'm going to hit both these guys with a medley of 3 short clips of 80s wrestler theme songs. So Uncle Mike and Mr. Greasy Meatball, I might want to grab a pen and paper or something so you can write down your answers. And then we shall see which of you is the superior guesser of 80s wrestling medleys. All right, here we go, listeners. Can you guess these 3 80s wrestlers via their theme songs? Here we go. There we go. There's your taste. 3 songs. 2 of those you probably will be able to get. 1, I may be surprised, but we'll go for a best of 3 battle. Uncle Mike, since you are in the lead, I will give you pride of place. Of course, Uncle Mike TOSAW from St. Charles Wealth Management as our reigning last year champion and current leader in our battle, sir. Can you guess all 3 or as many as possible of those 80s wrestling legends?
Great to be here. As the leader, I'm going to exercise my right to pass. I would like to let Sebastian answer first.
Oh, I don't know if that's in the rule set here.
I need to eliminate some of the ones.
I don't know if that's in the rule set. I may allow it for now, but we shall see.
It works on Family Feud.
As the leader, you should bravely and boldly go forth. But you know what? All right. Well, that will come into consideration if there's a tie. That may come back to bite you. I'm just saying that with the judges. They look not kindly upon passing. But all right, Mr. Meatball, the ball is in your court, sir. Can you guess those 3? I'm going to say 2 of them, legends. 1 of them, maybe not so much. I'm just throwing it out there.
Yeah, I got to tell you, I didn't know really any of them, but I'm going to make my best guesses. So with the first one, I was thinking that's the Big Boss Man. Second one, I was thinking it could be Hercules. And the last one, I was going to guess Bam Bam Bigelow. I'm thinking I'm 0 for 3.
All right. I will not reveal your results, not to play into Uncle Mike's hand. But I have Uncle Mike guess, and I will reveal the one. So, Uncle Mike, sir, you've benefited nothing. Except you heard Mark's guesses. What are your 3 guesses, Uncle Mike?
Well, I'm going to take this one up with the committee because the rules clearly state that the leader gets to pass. But I'll let this one go just because I'm a good sport. So I'm going to go with Leaping Lanny Poffo for the first one. For the second one, I will go with Superfly Jimmy Snuka. And for the third one, I will go with One Man Gang.
The One Man Gang? Okay. All right. So we had 3 wrestling entrances. We had 6 guesses total. And you guys got 0 right.
Yeah, I had a feeling.
I thought for sure one of you would get one of those. We have done 2 of those before in the past. The third one was kind of just an outlier. So the correct answers were Brutus the Barber Beefcake first, then Ricky the Dragon Steamboat. You should have got at least one of those 2, I would think. And the third one was kind of the curveball there. That was the Young Stallions, a tag team that I am not very familiar with there, but they apparently did wrestle in the 80s.
Stallions.
So there you go. You guys
we're getting deep today here.
You guys were all over the place and not even close. I should give you both negative. Uncle Mike, we'll have to put it out to the judges. Does Uncle Mike lose a point, listeners, for his cowardly actions? I don't know. We shall see. The chat's and listening and liking it. P&L Samantha says, you guys are always informative and fun to listen to. Well, thank you very much. Glad you guys like it as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our markets out there, listeners. Let's see if we can also dig out of that just hole of embarrassment that was dug by my two compatriots here. See if they can redeem themselves here on the trading block. That was, that was just a whole lot of just nothing. But you know what? The markets are not up to a whole lot of nothing. They're up to a whole lot of red right now. The S&P actually leading the dance rear, off about almost 1.15%. The NASDAQ and the Dow both right around off a little bit north of 1.05% to the dark side right now. All this red, though, listeners, not enough to keep VIX from continuing to erode. We're kind of in that season, listeners, coming out of the Thanksgiving, heading into the Christmas holiday season, not usually known as a great bastion of volatility, and that's being reflected right now in the numbers. VIX, when we kicked off the show before that embarrassment of an 80s wrestling game, 21 3/4, down a little over 1, about 1.15 points from where it was. Not on Thursday's show, but on Monday's show. Remember, no show last Thursday, listeners. VVIX was an 87, down a whopping 10 handles from where it was last Monday. VXX 1560, that's down about half a point. UVXY at about an 8 when we kicked off the show. It's down about half a point as well. SVIX 1360. SVIX, of course, the inverse product, listeners. That's up nearly a full point, about 0.85. Then we have UVIX 730. That's down a little over a point, about 1.2 points. And VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100 out there, was at about a 2650 when we kicked off the show, down about 1.3 points. All right, so a long way around. I don't know who to toss to first from that embarrassment. They should both not go. That should be their punishment. But that would punish you, the listeners, as well, listeners. So let's go around in order. Let's see if Uncle Mike first can redeem himself on this not Uncle Mike type of day. Uncle Mike, first off, how could you not get Brutus the Barber at least? I mean, I'm looking right now at the Brutus the Barber Beefcake grooming kit that I had that we actually tweeted about on the show that Brutus the Barber himself responded to on Twitter, which you said was like the highlight of your adult life. So how could you not at least get that, sir?
I mean, I'm embarrassed. I have nothing to say for myself. I mean,
I know Brutus is a fan of the network. I hope he's not listening to this one because he's going to have a single tear running down his face.
He would, but he'd also understand that I was cheated. And we all know that. And just the fact that I was cheated. And
did you cheat or did you attempt to cheat?
No, I did not attempt to cheat. I was cheated because I was. You were messing with my head by saying I couldn't pass. I mean, whoever heard that? Mm-hmm. I mean, the committee will hear about this, Mr. Longo. So, no. Brutus the Barber Beef.
Why is Meatball agreeing with you? I was taking his side
at all.
Oh, okay. I was going to say I was trying to help him out.
I think. What was your guess on the second one? Superfly. That was at least that one. That was nowhere near
his second guess was Superfly Jimmy Snuka. Yes, I have it all written down here.
That's not what his sounded like. But at the same time, at least Ricky the Dragon and Superfly, kind of similar, high flying tactics and stuff. I'll give him some credit there. But I thought my Bam Bam Bigelow was not bad, given that music being kind of tough and whatnot.
You definitely had a theme to yours. You went Big Boss Man and then right into Hercules. It was interesting. Well,
the Hercules, if you listen to it, that had like, I remember him having a war horn with his music. So that was what I was keying on there.
I was cheated. There's no doubt about it. I mean,
we'll put it up to the judges.
Man, I'd have known that because he talks about Cobb County, Georgia when he comes to the ring. So Brutus the Barber Beefcake is on my side with this one. He understands. I actually still have my Brutus the Barber Beefcake action figure from the 80s in my possession. So I'm not a Johnny-come-lately guy. I've been a Brutus the Barber Beefcake fan since the 80s. So it's obvious that I was cheated. The sound must not have been good or something. So, I mean, that's how it was. Sure. Brutus the Barber Beefcake would agree with me. And if Bobby the Brain Heenan was around, he'd defend me as well. So that's what I got to say about that.
All right, let's see if you can redeem yourself with what's going on in the market, sir. All eyes are upon you now.
All eyes are upon me. Got it. Well, I mean, right now we're pulling back a little bit today, and just one of the key numbers that we've been talking about for a while, if you just run a line across a chart over the course of the last year on the S&P 500, you're going to see it touching 3,900 quite a few times. So we're getting back towards the magnet number, so to speak. Whether we go below it, whether we stay above it, who knows? But we are having a hard time breaking away from that number, either to the upside or the downside. And this has been going on for a while now. And so this is something to where what's going to be interesting for the end of the year is if we do get a Santa Claus rally or not. Now, there is the anticipation that could be out there of the fact that we are approaching a third year of a presidential term. And typically in the third year of a presidential term, historically, markets have always done well. So the case for the bulls is that we could get a little bit of a buying frenzy with people wanting to be a part of that. And then, of course, the case for the bears is that the second the Fed says something about interest rates going higher, then, the bears are going to be coming, and the bears are going to be doing a lot better than the Chicago Bears did yesterday. That's for sure. So we're kind of at a precipice right now to where I could see this going either way, quite frankly. I think it's important, as always, to have risk management in place with whatever you're doing. And there's a case to go either way. We've had a little bit of a rally in the 10-year note over the course of the last few weeks. And so what's going to be interesting, at some stage, the 10-year note's going to get boring again, meaning it's not going to move a lot. And so what's going to be interesting is that as soon as the Fed determines that they're not going to continue to raise rates more, are we going to get a buyer in the bonds? Just because of the fact that if you've bought any, if you just watched the value of any bonds that has happened, values have gone down significantly. Now, I believe it was about 8 or 9 years ago, it was actually on this show, we talked about it. The Fed did not do anything with rates. They just kind of paused. And so essentially what happened is that bonds went down in value, and bonds said, okay, Fed, we're not waiting for you. We're going to raise the rates on our own a little bit. And so what's going to be interesting to see if it happens, is that if the Fed starts pausing, which I don't think they will at their next meeting by any means, but if they do start pausing, at some point when they do start pausing, will the bond market decide to lower rates on its own with buyers coming in? That's going to be an interesting question to keep an eye on as we get further along into this debacle we know as inflation at this stage. In terms of the commodity world, oil is up 1% on the day. Natural gas is down 2% on the day, which is relatively flat. Silver's down on the day, but it has rallied recently, and so it's going to be interesting to see if silver can continue to move. In terms of the sectors of the market, pretty much everything is down. There's not one thing really leading it, so to speak. I mean, you could make a case for energy being down a little bit more than the rest, as well as technology. But overall, this is a pretty broad-based sell-off on the day today. Not a huge sell-off, but it's still a sell-off nonetheless. And with that, being the gentleman that I am, I will turn it over to my man, Mark Sebastian. So,
yeah, Mark, I think kind of the interesting thing is with the COVID protests, I'm surprised Apple's not down more. It's down about, 2.2%. Apple is still well off the lows from a couple of weeks ago. It is broken its 50-day moving average, though. That is something to kind of keep an eye on. It could point toward, hey, maybe this does lead to kind of a second dip. I continue to think that Apple is the last shoe to drop before we can't really find a bottom until Apple decides to actually get some selling, which means the whole kind of broad-based markets are selling off. Retail looks real strong. Amazon's up, Costco's up, Best Buy up, Walmart having a nice day. We're seeing some strength in, a few of the Brazilian names because of the Bolsonaro stuff. But as a whole, the Russell 2000 kind of looks ugly today. The S&P and the Dow are both down about 1%, and the Nasdaq kind of leading us higher. Oil stocks are weak, especially in some of the big, huge conglomerates. They look soft. Some of the smaller names don't look as bad, and chip names were looking a little bit stronger earlier in the day, and have since taken it on the chin. And your momentum stocks, your high beta stocks are not having a good day at all. ARK Funds looks like it wants to hit an all-new low. Zoom is just an unmitigated disaster and looks like it's going to $50 the way the order flow is lining up. But if you're into retail, today's not so bad. And that's really about the only area where things don't look that bad. Target, in the Alta looking strong. Of the mega caps, you've got your Tesla and Amazon's up, but Microsoft and Apple and Google, the kind of more computer based, they do not look great. And I've just basically written Meta out of the mega cap discussion. The way that thing has just cratered, and the way they've lost their eye on the ball, it's no longer a part of my five big names.
You're not into the Mang anymore, sir?
I don't think Mang works anymore. I think it's Tang.
Yeah, Mang never really had a good ring to it anyway. I don't think they considered the Fangs when they rebranded to Meta out there. Let's go out there and see what is lighting it up out there. By the way, you mentioned Zoom, not in our top 10 today, but just interesting. I was looking at a chart, as you mentioned, that it's plummeting. And it is a little bit shy of $73 right now, listeners. And in January of 2020, it was exactly $73. So they have pretty much given up exactly what they made throughout the entirety of the pandemic. Listen, they got all the way up to $559, it looks like, in October of 2020. That was the high for Zoom. And they've pretty much been selling off since October of 2020. So they've been in a very prolonged bear market out there. But yes, pretty much all of that premium now has been wiped away out there in Zoom. My goodness, how the once mighty have fallen back to earth here. Let's see if the major indexes are falling back to earth. And listen, we mentioned at the top of the show, it's not exactly a rock'em sock'em robots day, and that's pretty much reflected in the volume numbers we're seeing out there right now. VIX doing a whopping 231,000 contracts. That's not nothing. It's not like it's $1.25 or something like that. So it's certainly some paper, but it's not blowing the doors off. It's not even halfway to its now lower ADV, which is down to about 572,000 right now. Obviously drifting south from the 600K level in north that it was not too long ago. SPY looking a little bit more robust, 4.22 million contracts on the tape. That ADV has come in a little bit over the holiday week, obviously down to about 7.56 million. So north of half of that looks like SPY on pace to hit that. SPX, 1.42 million contracts as well. So that's actually a pretty decent day for the S right now. The ADV, 2.6 million contracts. So north of halfway to its ADV as well. Small caps, at least the IWM flavor, doing a whole heck of a lot of nothing right now, even though small caps down about 1.3% right now, so actually leading the charge to the dark side. But IWM only doing 273,000 contracts. The ADV down from nearly a million to 868,000. Doesn't seem like it's going to hit that today. And the Qs, 1.25 million contracts on the tape. The ADV, 2.7 million contracts out there. Let's go to the single names out there, see what's lighting up our tape out there, listeners. And again, it's kind of a light day coming back from the holiday weekend. Maybe not everyone's back yet. Maybe some travel delays keeping folks from making it either way. Not a heck of a lot of paper on the tape today, listeners. Number 10 only cost you 168,000 contracts to break into the top 10 today. That's like dog days of summer volume, listen. That gets us to Shopify. Shopify, they were all the rage. Not too long ago, they made some headlines coming into their earnings. They ran from about $30 on 9th of November to about $40 over the span of a few weeks there. And then they have since given, actually, they're still kind of up there, at about 38 right now, up about $1.25 today. So Shopify getting some love out there. All the Black Friday action, perhaps driving some business on their platform. Number 9, is it a movie theater chain? Is it a gold miner? Is it just a meme stock madness? Either way, it's AMC, 7.25 right now, off about a quarter. Good for 180,000 contracts. Number 8, we've got the name that the Meatball says is no longer part of the Mang. It's Meta, the artist formerly known as Facebook, at 180,000 Again, not a heck of a lot of paper, listeners. Today, Meta off to about 220, trading right around 109.25 right now. Number 7, the chip zone coming early today, listeners. It is NVIDIA. We're all the way up at number 7. We're still up only to 183,000. That shows you how light of a day it is, listeners. NVIDIA, number 7, trading $1.60 right now, off about a little over $2. And again, good for 183,000 contracts. Microsoft, this is an interesting name, taking a bit of a hit today. I took some on Friday as well. Rumors coming out that, this has been swirling around them for a while. Is the DOJ going to allow that Activision takeover to go through? It does seem like the administration, the Congress, a little bit more leaning towards the antitrust lane these days. Big tech under the microscope more now than it has been in quite some time. So a lot of people were looking at this merger. It was announced a long time ago. We're waiting for this, and it seems like finally we're starting to hear some noise that doesn't seem like this is going to pass muster over there. Microsoft taking a hit again today, off a little over 5 points, about a little over 2%. Still trading 242.43. To give you some frame of reference, listeners, they got down to about 213 and a half. That was just on the 3rd of November. It's not too long ago. So they are about 30 handles north of their 52-week low right now. So they have some ways to go back down if they do want to continue selling off here to go back to their 52-week low. Numbers 5, going back out to China. China, all aflame these days, literally, figuratively. Alibaba, 76.16 right now, about 66 cents, good for 206. We're at number 5, listeners. We're barely north of 200,000. Again, protests across China. A lot of news going on in China, and a lot of eyes focus on that neck of the woods right now as well. Number 4, AMD, the chip zone, back to its normal spot here, at least for AMD, even though the volume, not quite what we are used to here. Only 248,000 contracts for number 4. That's AMD. Again, we're less than 250,000 contracts. We're all the way up at number 4, listeners. So you can add up the pretty much bottom 2/3 of the top 10, and maybe you'll add up to some of the top 3. We'll see. Again, number 4, AMD, 248,000 contracts on the tape. AMD off $1.30, trading about 73.85 right now. Number 3, it's the Amazonians out there, listeners. As the Meatball mentioned, kind of bucking the trend, actually up $1 right now, a little over 1%, trading a little bit shy of 94.5 right now. So looking pretty good, well off their 52-week low of a little bit shy of $86 that they hit not too long ago out there, right around the time we posted that poll on them, listeners. And then we've got number 2, it's the Fruit Company, another one when all eyes are in China. There have been, of course, in addition to the protests going on about COVID, there were some protests and some unrest around the Foxconn area, which is, of course, where Apple makes most of their iPhones over there. Their employees, I think they were unhappy with their bonuses, and Apple, as usual, not commenting on any of that stuff. A little bit shy of 145 right now, 144.90, off about 3.25, a little over 2%. I've said it before, I'll say it again, the market doesn't like a day when Apple is red, and Apple looking red, but I do agree with the Meatball. It has more room to run to the downside here. The 52-week low is 129.04, and we're not even close to that right now. We got closer to that a few weeks ago. We got back down into the low 130s before this pop-off, this rally kicked back into the market. So Apple could have some more way to go to the downside there. We shall see. If you're an Apple bull, hit me up. Let me know why you disagree as we head on out there to the number 1 spot. Yet again, Apple seems to have fully conceded the throne at this point to the number 1 player, which is Tesla. 186.08 right now, up about 3.25. So another name that is kind of bucking the trend. Tesla, they have come for this name for quite some time now. It hit its low for the year back. Just like that was just last week. 166.18. We are now pretty much $20 north of that. 186, and change out there right now. So they have rallied this name just in the last week or so out here after hitting its 52-week low. Good for $1.16 million right now. So decent paper for Tesla, but not blowing the doors off. Again, you take Tesla, and it's pretty much as much as pretty much our bottom 5 all combined. So again, kind of a light day out there, listeners. You know what? It's not light, though. It's still delivering some goods, is the earnings season. It's not done yet, listeners. Tomorrow we've got INTU on the docket, followed by Wednesday, we've got Petco, Hormel Foods. You want to know what's going on with Chili Vol? They'll tell you. Build-A-Bear Workshop, and also Victoria's Secret. So both ends of the spectrum, the kid spectrum, the adult spectrum, they're all on Wednesday. Snowflake, Salesforce, and Uncle Mike's favorite, Five Below. Thursday, we got his real favorite, Dollar General. Five Below is a little bit premium for him. Kroger and Big Lots and Land's End. And then Friday, we've got Cracker Barrel out there. So we do have updated, hot off the presses for you folks, listeners. Earnings move results, earnings season, and earnings trades reports. Let's look ahead really quickly to the earnings trades, or earnings reports, I should say, for you. And we've got Intuit coming up tomorrow after the bell. They're trading right around 392.5 when we ran this report. They were pricing in 22 3/4, listeners. In the past, they've moved 12.79. So, holy goodness, that's a heck of a lot of extra juice. Nearly a doubling, listeners, their previous move. So, Intuit pricing in a banger of an announcement tomorrow. Wow. We'll have to keep an eye on Intuit, listeners. What is afoot in Intuit out there? I just mentioned them, Build-A-Bear Workshop. They are on the 30th before the bell. 1883 is where they were trading. How much bear vol is out there right now? About $2.20 worth. In the past, though, they moved about $2.90, so less bear vol than we've seen in the past. Let's go out to Salesforce, 30th after the bell as well. 153 and about a third is where they were trading when we ran this report. They were pricing in about $11. In the past, they've moved about $10.60, so a little bit of extra juice, but nothing spectacular. Five Below, 30th after the bell as well. 161.63 is where they were trading. They were pricing in $12.35. In the past, they moved $9.86, so that's a fair amount of extra juice out there in Five Below as well. Wow. Interesting. If you want more juice, listeners, allow me to present Snowflake on the 30th after the bell as well. Remember this one? This was a hot IPO not too long ago. So it was a big name, and it seemed like it fell off people's radar. Now it's back again. It's putting up some numbers here. 144 3/4 is where it was trading when we ran this report. They were pricing in $18.45 worth of juice, listeners. In the past, they've moved $12.92. So Snowflake also pricing in just a freaking banger of a quarter here. Let's go to Big Lots first before the bell. 1904 is where they were trading. They were pricing in $2.68. In the past, they've moved $1.64. So they're pricing in over $1 worth of extra juice as well. My goodness. What is going on this cycle, listeners? You thought the earnings season was behind us, but no. More fun lies ahead. Dollar General on the first before the bell. 257 1/4 is where they were trading. They were pricing in $13.31. In the past, they moved 10 1/4. So Five Below and Dollar General bringing the heat when it comes to earnings. Let's do one more here. Let's go to MRVL first after the bell. $43 is where they were trading. They're pricing in $3.83. In the past, they've moved $3.28. So a fair amount of extra juice out there for MRVL as well. Wow. And you look at the earnings season reports, maybe you see why. We're hanging out right now at about 119%. So that is pretty dramatic outperformance no matter what way you slice it. Again, the week one is the banger week, listeners. Actually, week two, 217% for week two. Week six, hanging out at 99%. So we do have one underperformance week here so far. But that still all averages out to 119% for the season, listeners. And our average for every season since we started running these numbers pre-pandemic is 92%. So 119, that's pretty much a banger of a season. No new earnings trades being entered or exited today, but we are monitoring 77 long straddles and 48 long calendars for your earnings trading convenience. Check it out over there at the earnings trade report as we keep on rolling, listeners, right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. I was just looking at the chat there in the little break. It looks like you guys are not alone. Our chat had a hard time with the wrestler medley at the top of the show as well. Nichols says he knew Brutus at least. The rest of the themes were tough. We're glad to see Brutus at least get his due respect here. Unlike Uncle Mike, who dropped the ball for big fan of the show, Brutus the Barber Beefcake. And then Frank 1209 says, he's a wrestling fan, but I didn't know any of that. The medley format. I kind of thought that might throw a curveball out there. In the medley format. You guys are used to just getting one and having time to chew over it, but no. Wham, bam, thank you, ma'am. 3 in a row. Got to get the business done. And that one apparently too much for everyone out there. Intriguing results from our first foray into the medley. Let's see what our first foray into unusual activity has in store for us this week. That gets us out to First Solar. I haven't gone out to Solar in a little bit here on the show. You know them, ticker symbol FSLR. Trading right now 167.89, off about 343, or exactly 2% on the day. So they're kind of wearing it today. On the year, let's see, a year ago they were trading 106.85. So they've had an interesting year. They sold off for pretty much the lion's share at the beginning of the year. They got down to 59.60. That was their low for the year. That was back. It's like they actually hit that low back in May 12th. And then ever since then, they've been rallying. They got up to $74 on July 25th. Then they shot up. August 12th, they were trading 118. And then by, let's see, November 3rd, they're trading 157, all the way up to where they are right now, 168. They actually got up to 171.5, it looks like, last week. So this has been a nice run for First Solar. Over the last 6 months, they're up 137%. So nice little run for all things solar out there. Let's see what our Eye of Sauron found out here, listeners. This is an interesting one. Looks like, I think the technical term for this, Mr. Meatball, is just a freaking put-palooza going up today in First Solar. First, we saw, pun intended, we saw about almost 2,946 of the December 2nd, so in the weeklies, expiring this week here. 160 puts going up for a buck 56 on the bid. That is a 54 vol. So we thought, oh, someone's blasting away at some weekly puts. Okay, but then it didn't end there. We saw similar size, 2,406 going up of the December, near the end of the month in the weeklies, expiring on the 23rd. Also 160 puts going up for 485 again on the bid. This was about 30 minutes later or so. And then we also saw 2,058 of the 160 regular monthly puts also going up on the bid for $4.40. That was about splitting the difference between those other two trades, right in between them. And then a few minutes later, we saw 2,036 of the January expiring on the 6th, 162.5 puts going up again on the bid for $7.15. And then that's not enough, listeners. We also saw all the way out to September of 23, 1,999 of the September 150 puts going up again on the bid for, actually, it looks like they might have been buying those. Those were earlier. Those look like they were about a couple hours earlier. So maybe we'll pull those out of the rotation for now. But we also did see the March 150 puts going up for 953 on the bid about 2,000 times. So that all is around that same time frame. And then we also had the June 150 puts going up about 2,000 times for 1412. And not to be outdone, about 2,000 of the March 150 puts going up again. So they traded twice. So that's about 4,000 of those bad boys going up for 967 right off the bid as well. So, Mr. Meatball, we have the Dees expiring this week, 160 puts, and the Dees expiring on the 23rd, 160 puts. Then we have the Dees monthly, 160 puts. Then we have the Jan expiring on the 6th, 162 half puts. Then we have the SEP 150 puts. Then we have the March 150 puts. Then we have the June 150 puts. And then if that's not enough, 2,000 more of the March 150 puts. So it looks like it's a massive put-palooza out there. Most of it to the short side here. In your favorite name, Mr. Meatball, First Solar. What do you think? Someone's just drawn an enormous line in the sand, sir?
I mean, First Solar's had a really nice run. I'm surprised to see a ton of put selling in it at this point. But yeah, you know, a lot of this looks like, some of it looks like it might be closing, believe it or not. But some of it looks like it could be opening. So it could be some puts that are being rolled to some higher strikes that maybe they're taking some money off the table and moving up to some higher strikes. Because the way the flow looks, that would make a lot of sense to me. You know, closing some stuff that's way out of the money and moving it up to some levels where maybe there's a little more juice. So I'm going to go out on a limb and say it's a mixed bag of a bunch of opens and closes. But that is, but it does look like it's primarily premium harvesting.
Yeah, weirdly enough, if it is that, it's the near dated stuff that's being opened, and it's the longer dated stuff that could be being closed, which is kind of the opposite of the way you usually see that. Usually you see near dated stuff being rolled out, buy yourself a little bit more time, maybe a better strike price, but they're clearly opening on all the near dated stuff, and the longer term stuff is where it's a bit of a head scratcher. So either way, listeners, could be massive lines in the sand being written out here in First Solar. Maybe we've got some longer term lines in the sand being written. Maybe we got a mix. Maybe we got some being taken off and being rewritten very close to home, which would be weird. We don't see that too often. You don't usually take off, let's say, a March put and then re-roll it into a weekly expiring this week. But we've seen weirder stuff out there. Total, by the way, when we kicked off the show, listeners, of about 7,000 of the March 150 puts had gone up. That was the big dog, followed by about 6,300 of the DEES 160 puts, 5,300 of the SEP 150s, about 4,000 of the DEES 160 puts expiring this week, and 3,200 of the Jan 130 puts, and 3,200 of the DEES monthly 160 puts, and 3,200 as well of the DEES also expiring on the 9th. I didn't mention those, also gone. So just a put strip palooza here in First Solar today, listeners. We could keep going on that, but we want to get some other names out here as well. Let's go out to a newcomer. I always like to have a newcomer sneak its way onto the show, listeners. This is CRDO Technology Group, ticker symbol CRDO, CRDO. CRDO Semiconductors, that's one of their subsidiaries. So this is obviously a semi name here, trading $14 exactly right now, off about 39 cents, or about 2.75%. On the year, see, a year ago was trading $11.19. Then they shot up to about $17 in February. Then they shot back down to about $8.61. Their low for the year. That was back in May. Then they shot back up again in August to $16.30. And then right back down again to $9.88 on October 11th. And then right back up again to $15.36 on November 15th. And they've been trending back lower again. So if you wanted a range-bound name this year, CRDO Technology Group was delivering for you, trading right at the upper middle of that range right now, right around $14 exactly. And what did our Eye of Sauron found? Seems like somebody else has identified this range and is looking to take advantage of it to harvest some premium, because we saw this morning 2,359 of the Feb 17 halves, listeners, so $3.50 out of the money calls, going up right on the bid for 45 cents. It's about a 55 vol. The stock was pretty much exactly here when this trade went up, so no huge stock movement there. And there are going to be earnings between now and February expiration. The next announcement is this week on November 30th here. So, Mr. Meatball, what say you? Someone looking at this chart range perhaps and saying they want to pocket 45 cents, about 2,500 times, sir. And your favorite name, CRDO Technology Group Holding Limited.
Yeah, the CRDO is not one that I normally trade. They do have earnings coming up, and yeah, it must be. I mean, it must be some premium harvesting on that one, where they're saying, if the thing pops and I get called away, Probably some long stock with that position. It's probably not just a naked short call. That would be my best guess.
Usually that is the case. They got some stock in their back pocket. Interesting, they go all the way out to February when they have an earnings coming up right now. They could probably get a fair amount of juice just for the monthlies out there right now, then re-roll out to February. But hey, to each their own. They're taking advantage of that range either way. And let's end with another C-named. We've talked about this one before, but it's been a while. This is Camping World Holdings, Inc., ticker symbol CWH. Remember in the early part of the pandemic, listeners, where everyone and their mother needed to have an RV? It was the hot thing. I even looked into how easy they were to get, at least through renting and fun. And Camping World, a big provider of those out there. And Camping World right now, let's see, bit of his glory days perhaps behind it, trading 26 3/4 right now, off about $1.25 or about 4.25% today. So they're coming for it today. Let's see, on the year, it kicked off the year at 44 3/4. So obviously down to that. Hit its low actually 21.76 back in June. So it actually rallied since then. It got up to about 33, almost $34 in August before selling off again to about $23, and it's kind of been bouncing in this mid to low 20s range ever since. Of course, if you go beyond that, you go out to the crazy madness of the pandemic, it got up to its high of about 46.34. That was back in May of last year. So they had a nice run it up to, about $46 was about the high. And they're pretty much $26 right now. So obviously some of the bloom has come off the rose out there. We saw an interesting, actually looks like a couple of trades went up here pretty close to each other, which is always intriguing out here. 2 minutes apart to be precise. The first trade we saw that caught our eye was the Dees, again expiring this week, 27 puts. Again, they're trading 26.73. So these are in the money puts right now. Going up, paper looks like lifting the offer, paying 91 cents. This is actually through the offer. They were offered at 90 cents. They bought them 1,875 times. And right behind it, 2 minutes apart, we also saw someone coming in and scooping 1,132. So if it is related paper, it's on a bit of a ratio. 1,132 of the December expiring on the 9th. So 1 week farther out, 27 half calls, and they paid 75 cents for those. The stock had pretty much was about the same. It's exactly actually where it is right now, about 26.70 when both of these trades went up. So it's one of those things where it looks like a duck and it quacks like a duck. Chances are it is a duck. It could just be very closely timed but unrelated paper. Or it could be someone really wanting themselves a juicy ratio strangle here in Camping World. Mr. Meatball, which way do you lean, sir?
Let me look here. Camping World, you got to worry about campers here. It's having kind of an ugly day, and that is something to beware for some of these names. And yeah, I gotta think that there's some stock involved here. It just has to be. But because this one does not really trade that much, so I'm thinking this is done with some stock or to try and get into the name. Not huge paper, but for Camping World, just massive size.
Yeah, we don't usually see strangle type paper like this, so intriguing stuff here. We'll keep an eye on both of these as well. Obviously, we'll know about one leg of these fairly quickly out here. As we keep on rolling, it is time to unleash the beast known as Uncle Mike. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block, the portion of the show where Uncle Mike takes the reins to dispense some options, wit, and or wisdom. This week, he also endeavors to redeem himself, not just from his poor showing at the top of the show, which is unlike Uncle Mike in this game that he conceived of, but also his little bit of skullduggery there at the top of the show, a little bit of shadiness. We don't expect that from Uncle Mike. So Uncle Mike, you got a little bit of a hole to dig out from today. What you got in store for us today, sir?
I'll quote the Road Warrior Hawk. We got the belts. You don't like it, we don't care. I got the belt. Mm-hmm. Sergeant Slaughter is mine.
No, not after that. I think you've not a chance. I'm going to catch up.
Uh-oh, Uncle.
The only reason you're ahead is because Andrew has to cover for me sometimes, and he's so bad.
He is not good. Yes, you should work with him a little bit.
To it? When is Slaughter being sent out to the winner?
At the end of the year. At the end of the year, we will determine the winner, and then we will add up all the votes, and then the fantastic vintage Sarge will be heading out to the winner.
Got it. All right. Very good. So I'll be ringing in the new year with the Sarge. Very good to know. So today I want to talk about what you can do in terms of hedging. There's two styles of hedging that I like to do with my clients. There is we refer to it as a baby hedge, and then we refer to it as a hedge, so to speak. A hedge would be something to where it's very concrete, and we would actually say, okay, we have a put option here. No matter what, it's mathematically impossible for you to lose more than X in this stock, this investment, etc. That's something to where we don't touch it until the end of the term. We just let it sit. It's kind of like what is done on the inside of indexed annuities, except for you don't have to buy an annuity and have a 10-year surrender period with us if you want to do something similar to it, creating options. And it's extremely similar if it's inside of a qualified account, meaning an IRA. Obviously, we can't duplicate the tax treatment outside the IRA of that of an annuity, but inside an IRA, we can do some things that are very similar to an indexed annuity. And it's much more liquid, and it's a lot more comforting for a lot of people. The other way with which we hedge is what we refer to as a baby hedge. So we have a hedged portfolio that we have a bunch of stocks to where we track the S&P 500, attempting to beat it. And when we hedge it, what we actually use for a hedge is a put spread on SPY. And so we usually go about a year out. Otherwise, we've tried being more active in the past, but then it just becomes too much like short-term trading. It's not like hedging. But on the flip side, we don't want something as locked in and as stoic, so to speak, as a hedge, but something in the middle we refer to as a baby hedge. And so what we did is we had a December put spread on to where we're locking in. If the market goes down, we wanted to lock in roughly 6 to 8% of protection this year, meaning that if the market's down 10%, we only want to be down roughly 3 to 4%, just kind of depending on who gets filled where and that type of thing. So we'll just call it 6% as our hedge, so to speak. We bought a put spread, and we're hoping to lock in 6% if the market is down. So last week, with volatility coming down like it has, what we decided to do is we actually got out of our baby hedge early. And that's something we typically don't do. In fact, this is the first time we've ever done it this early for this reason. And so the distance between strikes was at a point to where the cost of taking profit on the spread or selling the put spread for a profit, it would have been mathematically impossible for us to have gotten any more than the distance between strikes, minus a very minor amount. So long story short, and I'm going to use the numbers are going to be changed to protect the innocent being me from my compliance people chewing me out. But let's say we had a 10-point put spread. We bought the put spread for $2, and the most we can make on it is if it's priced at $10, because that's the difference between strikes. We were able to get out at roughly $9.80, and we were able to get out last week for that amount. Now, if the market does go lower, we could miss out on a couple pennies still going into the end of the year. But after doing the math on it, what we've actually cost the clients is roughly 10 basis points if the market does continue to stay below the short strike price of the put. Now, if the market does come roaring back this last month, I don't know if it will, maybe it will, maybe it won't, and we don't take any additional hedging action, then we essentially just got a nice amount of percentage points into our hedge for our portfolio, and we're able to get the full benefit even if the market doesn't finish down, in theory. So the point of this is that I think there's a case to be made for 3 levels of hedging. That's kind of how we like to do it. One of them would be a very stoic hedge to where you buy the put, and this is mathematically what you can or cannot do. Maybe you sell a call to finance it, whatever the case may be, but you're very inactive with it. The other extreme is where you're essentially doing short-term trading, to where if you get profits on a put option, you take the profit and you go roll it to another strike, or you stay off the hedge for a while, and that's very active. What we did with this baby hedge, it's somewhere kind of in the middle, to where we're looking to get downside only using a put spread, so we're not necessarily getting catastrophe protection, but we're getting minor protection on it. And when it's able to get taken, or when we're able to take a profit on it for roughly 99% of the potential profit, we did. So those are the 3 levels of hedging with which you can consider when looking to hedge a position.
All right, and we're coming up against it, so let's just go, listeners, around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on out there until we get here together on the show again on Thursday. And really quickly, listeners, I did mention at the top of the show we have a new question of the week, as is appropriate for a new week. This week's question, we've seen Volatile Road in recent weeks. Have we entered a new VIX regime, or is this just a blip on the radar? Quite simply, where will VIX close at the end of the year? Yes, it is that time, listeners. It is time for the VIX end-of-year question. Gave you 4 choices around here, so the 20 to 23 range. A little higher, 23.01 to 26, or even higher, north of 26, or lower, below 20. And right now we have around here, the 20 to 23 range is winning with 34.8% of the vote, followed by about a little over 30% of you saying the 23 to 26 range, and then 26.1% saying north of 26, only 8.7% saying we're going to be in the teens, below 20 at the end of the year. Excuse me, that just went live over there at Options on Twitter is the place to find it, listeners, as we go around the horn. First, out to the greasiest of meatballs, Mr. Meatball, sir. What are you keeping an eye on until our next show? And also, where can the folks find you if they want to learn more about what you got cooking, sir?
Yeah, I'm watching Chairman Powell speak. We do have some earnings still going on. I'm watching the S&P. I want to see, are we going to make another run at 39.50 and then 3900 from there? And then what direction we take? I'm watching VIX. I'm watching a whole lot, frankly, is what it comes down to. And then, if you want to read all my analysis and everything I do, go to optionpit.com and check out the different posts that I write. I write a VIX blog just about every day, and I write a macro blog from time to time as well that's worth a read.
Are you down with our audience? You think they're right with the 20 to 23 range, sir, for the end of the year?
For VIX, yeah.
Hanging out here, listeners. You can find more over there in the old OP, optionpit.com. And Mr. Uncle Mike, sir, what are you keeping an eye on to our next show on Thursday? And where can folks find you if they want to give you a hard time about your skullduggery at the top of the show?
Everything that Mark said, along with Non-Farm coming out on Friday morning. If you are interested in working with a financial advisor, feel free to check out my website, stcharleswealth.com. Set up an appointment to call and or email me or whatever way you want to get in contact. And also follow me on Twitter, at Mike TOSAW, TOSAW.
There you go. stcharleswealth.com is the place to find him. That music means we are done for this episode, listeners. But don't worry if you're one of our pro folks hanging out there. We'll be back in a little bit with the crypto rundown to break down all the madness that's been going on in the world of crypto over the course of the past week. Then back again tomorrow, listeners. For the pro folks, we'll get it right away. For on-demand folks, it'll be coming up a little bit later on the network for on-demand with the advisors option. It'll be myself and Mr. Matt from ORATS, as well as special guests breaking down all of the fun action out there for the asset managers and advisors. Back again on Wednesday, like I said. Got a trifecta of content on Wednesday. We got Options Bootcamp, we got Options Playbook Radio, and Pro Q&A with the Flow Master coming at you for all your pro folks on Wednesday. And then Thursday, back again, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.